Welcome to Parent-Tween Connection Talks, where we bring you insight from the experts who can help you navigate life with teens and tweens. I'm Clarissa Constantine, founder of the Parent-Tween Connection. I've worked with teens and their families for more than 2 decades, and I've come to believe that the more supported and knowledgeable parents and the other members of the proverbial village feel, the better they can connect with and advocate for their teens and tweens. And ultimately, that means we'll lose fewer kids to suicide. So Parent-Tween Connection talks about anything and everything teen and tween related. And we invite you to continue these conversations with us in the Parent-Tween Connection group on Facebook. So listen in, learn, and no matter what, keep connecting. Welcome back to the next episode of Parent-Tween Connection Talks. Today, we have the privilege of talking with Chris Mitchell of the Mitchell Insurance Group. Now, Chris is a Colorado native and is proud to help clients across the Front Range as well as in Arizona. He can also help folks with coverage in a number of other states as well. Chris still lives here in the Littleton, Colorado area with his wife and his 2 children. And I can tell you personally, he is absolutely a family man. And because he is a family man, helping families make sure that they have appropriate coverage is an important priority for him. Today, we talk about multiple factors that influence teen driver insurance rates. We talk about liability limits, and we talk about different ways to try to get discounts and savings on those expenses. Now, you're also going to want to stay tuned for our next episode, which is going to present Glenn Fair. Glenn is one of the founding members at Oakmont Law, and he is a personal injury attorney. He can speak to the other side of the conversation that Chris and I have in this episode when he works with folks who end up seeing that others who have caused accidents have been uninsured or underinsured. Those are definite risks that you want to pay attention to. So consider today's episode a part 1, and then next episode with Glenn to be a part 2 of the same conversation. All right, we are here with Chris Mitchell, aka the Insurance Ninja. Chris is an insurance broker. He is based here in Colorado, but he can support folks in almost any state in the US. So if you're listening to us elsewhere, please know that he is a fantastic resource, number one, just for knowledge, but also he could be a good resource to help you with your actual insurance needs as well. And so Chris is the founder of the Mitchell Insurance Group, and I can speak personally to the fact that he is a rock star about insurance knowledge. So Chris, thank you for joining me.
Thanks for having me.
Absolutely. So, we hear parents talking about, oh my goodness, my kid just got their learner's permit. And then, oh, holy cow, my kid is now licensed. My insurance is going to go through the roof. It's like, having another mortgage, it feels like for some families. So first things first, at what point in that process, like the learner's permit / insurance, when do kids need to have, learner's permit versus licensure to actually drive the car on their own? At what point do the kids need to be added to the car insurance policy?
So that's a great question. And it really depends on the carrier itself.
Okay.
Some carriers require kids with learner's permits to be added on just so the carrier kind of has hey, we added them on at a certain date so they can collect a premium right when they turn 16. Black and white, it probably when they get their permit, they should be added on just so everybody that is in the household is listed on the policy, and we're not trying to cut corners in one way or another. So black and white, it would probably be when the kid gets their permit, and then start having that conversation with your agent about what are we looking at? Like real numbers as we sit today, what are we looking at if my kid got their license tomorrow? Because a lot of people really shortchange what the actual premium is going to be, and it can be a tough conversation.
Sure.
We're adding $3,000 a year for insurance premiums, and that is not an uncommon number.
Right.
I've seen it as low as $800 and as high as about $7,000 for adding a teen on.
So what are the variables that impact that?
The variables that impact that are the overall household's claims and ticket history. So if we're looking at a couple accidents with mom or dad and a couple tickets with mom or dad, or brother or sister if they're already on the policy, and then we add a brand new driver on, the premiums tend to be a lot higher than a household without any tickets or accidents.
I had no idea. I thought it was just based on the fact that teen drivers, because of inexperience, tend to be more prone to accidents. I had no idea that the parental track record could impact that. Why does that impact it?
Um, and I can't exactly specifically tell you that, but I could make some assumptions, but making assumptions, we all know what those do. Um,
Fair enough.
and,
Okay.
and really from what I see personally is some of the cars that you have, like high performance cars in the household, and you're letting a teen potentially drive that car.
Okay.
So that premium on the car is already inflated, and then you add a teen driver with very little experience getting in, maybe driving that car to a homecoming dance or something like that, and just the insurance carrier knowing so much, with so much data with all these teens, and basically all the data that they've collected over hundreds of years, that they tend to say your premium is more, you're more than likely going to have an accident or a ticket in the next 2 years. So we're going to upfront charge you for that. And if it doesn't happen, then it doesn't happen, but you're still paying all that premium on it.
Up at the front. Okay. So then say, mom and dad have an accident or a couple of tickets or something when kiddo turns 16. Then as the adults, as the parents' tickets fall off, does that impact the rate as it relates to the teenager?
So the teenager gets rated as their own person.
Okay.
The tickets and the accidents that the parents may or may have on their record, they just increase the premium amount that's being paid out,
Okay.
or that's being paid towards the insurance company. It's not saying that the mom and dad, since they have tickets, that the teen is going to be a lot higher rated as a driver. They just add on to the already inflated premium that mom and dad already have. So
Got it.
I wanted to clarify that one a little bit, because the
Okay.
way it initially sounded is it does initially it'll just inflate everything just because everybody's got a poor driving record. So
Got it. Okay. So then when a kiddo gets licensed at 16, certainly if they get tickets or they have accidents, that's going to inflate their rate as time goes on, as it does for all of us. What can a kiddo do, or at what point do their rates start dropping, and or can they do anything to help lessen the rates for the teenage drivers?
So initially, good grades. Most carriers have a 3.0 GPA or better. That's probably the biggest discount when it comes to teen drivers. The other one is some sort of driving class that they go through here in Colorado. Oh shoot, I'm blanking on that.
But like a driver's ed kind of program.
Yeah, like a driver's ed, master drive is what I was looking for.
Okay.
Those types of classes help out too. And when kids go away to college, if there's another one, if they're over 100 miles away without a car, that also helps out with the premiums with the younger drivers.
Okay.
But initially, it's good grades is probably the biggest one.
Okay.
That is the biggest discount. So
and so we can expect, like, for the rates themselves, even irrespective of those discounts, which we'll get to in a bit, but those rates are going to be high, certainly when they start driving. At what point is it reasonable to expect that those rates are going to decrease just in general? Because like they're no longer the teen new driver. Like what kind of time frame do they need? Is it like when you hit 25, like with rental cars, or is it duration of having a license? Because I know I don't pay what a teenage driver would pay, but like I'm also way far away from a teenage driver. Like where would that change happen for families? At like what age?
That change really happens when the young driver gets off the parents' policy.
Interesting. Okay.
So that 25 is a myth.
Okay.
There's no drastic decrease when you turn 25 that the insurance company says you get a premium discount. So I guess a little informational on this is as you age, you have an insurance score to start with. So a 16-year-old has no history with their insurance.
Right.
They're on mom and dad's policy. They're on mom and dad's policy for however many years. Um, they get a renter's policy when they go off to college. So their insurance history starts to build up. So the more that they actually distance themselves and get their own policies at a younger age, they start getting that insurance history built up. And I mean, credit's another big factor in many states. So the faster they get their credit score up, that also helps their insurance score, which in turn, when they're ready to jump off mom and dad's policy, helps them out in the long run.
I had no idea that credit score impacted insurance rating.
It's actually a pretty big rating in most states. There's some states that are going away from it.
Okay. All right. Good to know. So we've got let your insurance agent know when your kid is getting their learner's permit, start having the conversation, start, identifying what that's actually going to run. So we can prepare for it. And that, the sooner, and maybe this is not the right way to say it, but for the student's long-term benefit, for the kiddo's long-term benefit, the sooner they're able to develop a credit score and get their own insurance independent of mom and dad, that is beneficial for them in the long term in terms of their own insurance rates and developing that insurance rating akin to a credit rating.
Correct.
Got it.
Another thing I'm going to add on there is, and I'm a broker, so I'm kind of biased. I used to be a captive agent with farmers, you know that.
Uh-huh.
Working with a broker with multiple different carriers at our disposal, compared to some of the bigger captive brands. I don't want to name any of them just because they're all great carriers. They have one product, and
Right.
if they don't like teen drivers, their premium will reflect that. Whereas there's a lot of carriers out there that don't mind teen drivers. They don't charge as much. So working with a broker can actually help out a lot.
Sure.
Finding the right policy, the right fit for the entire family and not just for the teen driver.
Right. Cool. So let's talk for a minute about liability limits. And let's go from the foundation of, like, let's say we've got a teenager listening to this that doesn't understand the ins and outs of, like, what does liability mean? What is an umbrella policy? Like, can you give us definitions, and to the extent that you're able, your recommendations or what people need to be looking for?
So liability, in most states, there's a couple that have different requirements for what the minimum to drive on the road is. But most states, it's bodily injury to others and property damage. And there's very small amounts of insurance that is required to be on the road. So with teen drivers, and I'm directing this towards homeowners especially,
Okay.
is carry as much liability as your net worth. So whether that's 500,000 of total net worth, a million of net worth, if it's 50,000 of net worth, your liability limits on your auto policy should reflect as high as you can, and then add on a personal liability umbrella to that. Because as a teen driver, 6 days in, I crashed my car. Yeah. Luckily, I didn't hurt anybody. I just hit a tree and just hurt my pride. But if it was another car, or I hit somebody and caused bodily injury to them, that could have been detrimental to my parents. And now, knowing what I know, you don't have to be a millionaire to be sued like one.
And I think that's a valid point. I think a lot of folks, and I think this is just human nature, we tend to live in but that's not going to happen to me space. But fundamentally, this is why we have insurance. Because every time you drive out on the highway and there's an accident, there was somebody who thought it's not going to happen to me, and it happened to them.
Yep.
And so, just to clarify, when you're talking about bodily injury and damage to personal property, that means if the teenager is in a car accident and hurts someone else or damages someone else's property, that's outside of your family, there's a problem. And like, I know you and I have had the conversations of, you drive off the road, you sideswipe a vehicle or whatever, and there's the vehicular damage, or you drive up into somebody's house, like that's the personal property. But if you actually hurt somebody else who then ends up having medical bills, that person can come back and sue the parents for everything you're worth.
That's above my legal background, but yes, you're correct in that that line of thought.
Okay,
That
fair
your
enough.
assets can be exposed to a judgment at that point. So if
Got it.
your teen hits T-bone somebody and breaks their femur, and they can't walk for 6-7 months, and they were reliant on their job, and it was a walking job, then there's a lot of lost wages at that point. Where are we going to recoup those from?
Right.
If we've already capped out our insurance, then where is the rest of that money coming from? Typically, it's savings account, retirements, equity in homes, et cetera, et cetera.
So they can potentially, and again, recognizing this is where a criminal, or not a criminal, a personal injury attorney would be able to speak more, and especially in the different states, speak to the legalities in individual states. But hypothetically speaking, retirement accounts can be garnished, if you will. I don't know if that's the proper term, but like there's a reason that you're saying like you want to have the liability that equals your net worth, because theoretically all of your net worth could be exposed.
Correct.
Okay.
Even future wages could be garnished too if there's not enough dollar amounts in your net worth.
Got it. Okay. So then, I'm sorry, go ahead.
I was going to say, and going back to your point, you're driving on the highway and you see the accident, nobody expected that to happen to them. One of my favorite things to say is, what's it going to cost me to have this insurance, and what's it going to cost me if I don't have this insurance and something happened?
Right. Absolutely. So we're talking so far we've been talking about bodily injury to another and personal property damage to another.
Mm-hmm.
What happens if the teenage driver who is in the accident is injured? Like, where does the insurance, like what kind of insurance is it that covers that, and or that covers the damage to your own property, i.e. the car that you wrecked 6 days into having your driver's license? Is that included in that category?
Well, let me ask you, are we at fault in this accident or not at fault?
Let's talk worst case scenario, because we want parents to be prepared about what they need to have when they're looking at these options or what they need to consider. So let's say that our newly minted driver, I don't know, Chris, were you at fault?
I was definitely at fault. I put the brake on some ice and was definitely at fault.
Okay. So what happens in that situation?
So in my situation where I just hit a tree, I didn't hit anybody else. It would just be your collision coverage, your collision deductible on your policy.
Okay.
I don't recall if my dad had that on my car or not. I was not in insurance at 16. So I know we ended up buying some aftermarket parts and putting them on ourselves. So my guess is we weren't covered for that. But if you did have collision coverage on, then you could file a claim. And again, it's talking to your agent to make sure that is a claim-worthy thing that we should be doing, because if it is a couple dollars over your deductible, I would advise against it, because your rates are going to go up significantly higher. But if it's claim worthy, then yeah, the collision coverage would be your deductible at that point.
Okay. And what about, like, had you sustained any injuries to yourself being at fault in that accident? What aspect of insurance might come into play there?
In my particular case, I don't really know if there was any injuries. I mean, medical payments, it's regardless of fault. So you have that coverage.
Okay.
And typically that's minimum of 5,000, but you can reject that. And I have seen people reject that on their policies just because they don't understand it. Hey, I have medical insurance. I don't need this particular coverage.
Right.
But it's no fault coverage, and it pays out, and it's basically to cover your out-of-pocket deductible.
Got it. Okay.
For your health insurance.
And so if any of you are in a situation as our listeners and you're going, golly, this still sounds like Greek to me, this is why somebody like Chris exists. It's, why we have, why we have real estate agents. It's why we have accountants. It's because they're the professionals who know these pieces and can explain these things to us and help us go, hey, here's what's really the best option for your family. And somebody like Chris also brings in, renter's insurance if you don't own a home, or homeowner's insurance. And then Chris also mentioned, if your kiddo goes off to college, it makes sense to add a renter's policy on their dorm room to cover the contents of the dorm room, like those kinds of things. Somebody like Chris can help with a lot of that. So then that brings me to, because now we're talking multiple policies or multiple coverages potentially, with one policy or in line items on a policy. Talk to us about discounts and savings. We've established that insuring teen drivers is not inexpensive, and there's a reason for that because of the potential exposure that we have. But we've already talked about like good driver discounts or like driving classes and GPAs. What are some of the things that you would recommend to folks to look at in terms of mitigating some of this significant increase that they're potentially looking at?
So discounts, I think they are what they are. So carriers offer every single discount you could probably think of, and it's all made up dollar amounts in my opinion. But if you can keep your home and auto or home and renters with the same carrier, that does give you a little bit of a break. When it comes to a new vehicle for a younger driver, not carrying comprehensive and collision on it, even though they're more likely to have an accident, that can keep down on your premiums a little bit. There's different coverages and different ways to structure a policy that you can still have some coverage for collisions, but not necessarily pay out all the premium for it. Like you said, it's like talking Greek to somebody that has no idea what you're talking about. So
Right. Absolutely.
I mean,
Absolutely.
I can try and lay out all these scenarios, but I mean, it may just go over most people's head.
Right. So basically we'd say like there are ways that somebody like you can help a family and go, okay, here are the items where I definitely wouldn't recommend that you cut corners, but if we need to cut corners, here's a corner we could cut, and then here's the impact it's going to have. And then
Correct.
help us determine, all right, well, if it's going to save me $500 a year, $50 a month on average, $40 a month, is that worth the potential increase in exposure? And we can kind of look at the adding and subtracting game, it sounds like, to figure out what the net might be on that and help families determine what the best plan of action is for them. Because I mean, sometimes $40, that $40 makes a big difference in many pockets, so sometimes that is a corner that we need to cut, and there's an aspect where like, I know my mom wouldn't even let me get my license until I was darn close to 18 because we just didn't at the time have the money in the coffers to pay the increase of what my car insurance was going to be. And even though I was working part-time, what I was earning at my part-time job would have potentially gone to cover the entirety of the increase on my car insurance, at which point, what's the point? Because I'm just working to pay the insurance at that age. So it's, golly, getting a driver's license is a rite of passage for kids, but for some families, it's just a non-option. And so, because of the cost of the insurance sometimes. What is it? I know one of the things for me when I went off to college, and I've definitely worked with families who are in this situation, being aware of some of the situations that kids can end up in college or that end up in college, being at a party where they don't want to be, or they got driven somewhere by somebody else. What are the ramifications of having a license but not actually having your own car, or not being on an insurance policy, but still being a licensed driver, so that in the event of an emergency situation like that, you have the capacity to drive? Can you speak to that? If, does the insurance follow the person? Does the insurance follow the car? What happens in a situation like that?
So the insurance follows the car.
Okay.
So if you are a licensed driver, it'd be similar to you borrowing my car for the night because yours broke down.
Okay.
The car is still insured. You are still covered under my insurance, even if you don't have your own personal insurance.
Okay.
So, but if you do have your own personal insurance and you're on an insurance policy, yours would become primary at that point, and mine on the car would become secondary.
Okay. So there is something to be said for if a kid is going off to college, but they don't have their own vehicle, becoming licensed, letting your agent know that they're licensed, but they're not actually going to be an active driver. But it puts them, my philosophy at the time for me was, as a young woman, I did everything I could to keep myself in safe situations. But I felt like being able to take a friend's vehicle if they had been drinking, for example, or they're under the influence of another substance. Me driving at that point was the safer option. There is something to be said for that for some families.
Correct. Yeah. And like I said, it is the vehicle that we are insuring. It's not the individual that we're insuring.
Got it. All right. Any parting words for families about navigating this process of teen drivers? Anything that we haven't covered that's really important for them to know?
My biggest thing is talk to somebody you trust
Okay.
and that is trustworthy, knows their stuff. That I may not be the perfect person for everybody I talk to, but I will at least give advice and try and help out as much as possible. So that trusted person, when it comes to insurance, is worth its weight in gold. Call centers like 1-800, I saw it on TV, call this number. They don't know the policies as well as most agents because they're just in a call center setting. Um, I would say a trusted agent would be my biggest recommendation to anybody listening.
Okay. The other thing that I will add on, because I've talked with you many times about this, and that I've heard you recommend, is regular reviews of policies. Whether it's
yeah.
Go ahead.
I said that's almost a no-brainer, especially right now, where we're at in insurance. Insurance is going to get crazy over the next probably 3-4 years with premiums, and reviewing it every time your policy renews. Just a simple, hey, we have added XYZ, or we're still in the same spot. Do we need to do anything? We look at my policy, our limit's good, our we have a 15-year-old vehicle. Do we need to carry comprehensive and collision on it? And just have that conversation.
Okay. And I know we ran into that here in Colorado, not specifically on vehicular insurance, but on homeowners insurance. Unfortunately, I know it made news at the end of 2021 that we had those totally unexpected and horrific fires that took out a significant chunk of suburbia here in the Denver suburb area. And unfortunately, what a lot of families are finding is that the cost or their insurance is not covering replacement, like rebuild costs. In the long term, they were actually uninsured, which is leaving a lot of people in a very challenging situation. So you're saying like every 6 months, every year review?
I would say every time your policy is up for renewal, which is on your autos is either every 6 months or every year, and your home or renters should be every year. But in 365 days, a lot can change.
Right.
And a lot of the people that ran into issues out in Colorado were they did a brand new kitchen, and they never let their insurance carrier know, hey, we did a brand new kitchen. So the $50,000, $60,000, $100,000 that they spent on that was never reflected in their insurance policy.
Interesting. Cool. I mean, not cool, but good to know.
Yeah.
Cool information to know.
Super bummer for all those people that were underinsured.
Right.
But in my mind, it's kind of a blessing in disguise that it brings the consumers to, I want coverage for what we should have coverage for.
Right.
But still at a reasonable price. It's not just the lowest price anymore, which can get you in a lot of hot water because you're getting the lowest price and crap coverage pays out not as well.
Correct. Yeah. All right. So encourage our kids to keep good grades.
Yep.
Definitely
100%.
put them through a driver's ed course, and communicate. Well, make sure that your liability coverage is at least equal to your total net worth, so that God forbid the worst happens, you're not completely exposed due to an error in judgment on your kiddo's part. And make sure that we're reviewing policies every 6 months to a year whenever the policy reviews. Those are my big takeaways here. And then
those are big ones.
I would also say, and I can speak to this from personal experience, that working with somebody like you definitely brings me peace of mind, because the call center is like, what do you do when you get a ticket? Call a call center and be like, oh crap, I got a ticket. I mean, they're going to find out, but I know working with a broker like you gives me flexibility that, when someone in my family does end up with a ticket, not myself, of course.
No, it definitely wasn't you.
I can reach out to somebody like you and say, hey, here's what happened. Can you help me? Is there another option? I know when I reached out to you and my insurance was about to go through the roof and I was in a veritable panic about it, you were definitely a calming voice. So I know somebody like you can be a huge resource. So for any of our folks listening, thank you for tuning in to Parent Tween Connection Talks, to certainly talking about what we need to know about insurance and teen drivers, and how to keep our costs reasonable and not end up exposed. All of Chris's contact information will be in the show notes on YouTube and on your favorite podcast resource. And you can absolutely find him at migcolorado.com. That's Mitchell Insurance Group, mig.com, colorado.com. So Chris Mitchell, the insurance ninja, thank you so much for being with us. I appreciate it.
Thanks for having me.
And that's a wrap on today's episode of Parent Tween Connection Talks. Be sure to check out the show notes for any links that we mentioned during our conversation. If you'd like a copy of the Foundations of Connection, you can find it right on our homepage at www.parenttweenconnection.com. And if you'd like to feel more supported as a parent and have a closer, healthier relationship with the teen or tween in your life, we invite you to join the Parent Tween Village. It's a judgment-free zone for the members of that village that it takes to raise a child. For just $19.99 a month or $199 a year, you'll join a community of parents and other supporters of teens and tweens who are dedicated to having the best relationships they can with the kids they love. You'll hear upcoming episodes live streamed into the group as we record them, along with exclusive bonus trainings from many of our podcast guests. You'll also be able to join our monthly group connection calls and other workshops just for members of the Parent Tween Village. You can join today at www.parenttweenconnection.com. And until next time, keep listening, keep learning, and keep connecting.